Hey everyone, welcome back to Corporate Decoder, the place where we shine a light on the nitty-gritty of corporate filings and sometimes find out a company is in a bit of a pickle. Today we're diving into a report from VYNE Therapeutics Inc. and let's just say it's not exactly a happy dance for this company regarding their stock market status. We're going to break down what this all means for them and what could happen next. Before we get into the weeds, if you like getting your corporate news served straight up with no fluff, make sure you're subscribed. And hey, we've got a growing community over on Discord ready to chat about these filings, so smash that link in the description. So what's the big news? VYNE Therapeutics Inc. got a bit of a wake-up call from the Nasdaq stock market. They were told they're not meeting a basic rule, keeping their stock price above $1. The reason is pretty straightforward. Their stock price has been below $1 for 30 days in a row. Now, this doesn't mean their stock is immediately kicked off the Nasdaq capital market, not yet anyway, but it's a serious warning sign. Think of it like getting a speeding ticket. You're not going to jail right away, but you've broken a rule and you need to fix it or there will be bigger consequences. Nasdaq gave them a deadline. They have 180 days, which brings us to March 10, 2025, to get their stock price back up to at least $1 and keep it there for 10 straight trading days. If they do that, Nasdaq will send them a letter saying they're back on track. For now, their shares will keep trading on the Nasdaq capital market, so investors can still buy and sell them. The company is looking at all their options to get back in line with the rules. Now, what are these options? Well, for a company like VYNE, which is in the biotech space, this usually means business updates that excite investors, and this is a common move when a stock price is low, a reverse stock split. A reverse stock split is basically where a company decides to consolidate its shares. For example, they might decide that every 10 old shares will become one new share. This would artificially boost the stock price per share, making it look like it's above that $1 mark. But it doesn't change the overall value of the company or the total value of what you own overnight. It's more of a cosmetic fix to meet listing requirements. The filing mentions this as a possibility, a reverse stock split. It's a tool companies use to avoid being delisted, but it can be a double-edged sword. While it meets the listing rules, it can sometimes be seen by the market as a sign of weakness, as if the company can't generate investor confidence through natural stock price increases. If they can't fix this by the first deadline, they might get another chance, another 180 days. But to get this second chance, they have to show Nasdaq they are serious about fixing the problem, likely by doing that reverse stock split we talked about, and also meeting another requirement having at least $1 million in market value for their publicly traded shares. This market value part is important. It's not just about the price per share being above $1, but also about the total value of all the shares that are freely available for trading by the public. If they fail to meet all these criteria, then things get serious and Nasdaq will officially say their stock is subject to being delisted. That would be a major blow. Delisting means their stock would likely move from a major exchange like Nasdaq to what's called the over-the-counter or OTC markets. These markets are generally less regulated, less liquid, and have much lower trading volumes. For investors, it typically means a significant drop in stock liquidity and often a further decline in price because fewer investors trade on these smaller markets. While this report is mainly about the delisting notice, it doesn't give us detailed financial tables of revenue or profit. However, the fact that the stock price is so low, under $1 for this many days, usually hints at some underlying business challenges or a lack of strong positive news that would drive investor confidence. In the world of biotech, stock prices are very sensitive to clinical trial results, regulatory approvals, and market adoption of their products. If recent news hasn't been overwhelmingly positive, or if there are concerns about their pipeline or financial runway, this can easily translate into a low fall price. Looking at the company's registration details, they are incorporated in Delaware and have a Nasdaq file number that tells us they are a listed company. Incorporated in Delaware, as many companies are for legal and business structure reasons. This file number here is unique to VYNE Therapeutics Inc. With the Securities and Exchange Commission, the SEC, it's like their official ID card in the world of public companies. And this number is their employee identification number from the IRS. It's essentially a social security number for their business. The company name itself is VYNE Therapeutics Inc. Being a therapeutics company, their business is likely focused on developing drugs or medical treatments. They have common stock and the par value is a very small amount, 1/10,000th of a dollar. This is typical for common stock and doesn't really reflect the market price. Their trading symbol or ticker symbol is VYNE. This is what you'd use to find the stock on a trading platform. And as we've discussed, their stock is traded on the Nasdaq Stock Market LLC also. Diving into the core of the issue, this report is essentially a notification about meeting listing requirements. It's not a financial earnings report, but the stock price itself is a major indicator of how the market perceives the company's future prospects. A stock price below $1 for an extended period usually signals that investors are not confident in the company's ability to generate future profits or grow significantly. In the biotech sector, companies often burn through a lot of cash during research and development phases. Investors are looking for positive clinical trial data, regulatory approvals, and a clear path to commercialization for drugs. If there have been setbacks in clinical trials, delays in regulatory processes, or if the company's core product isn't gaining traction, the stock price will reflect that sentiment. There's always the possibility that the company has a strong scientific foundation and promising drugs in development, but perhaps funding or market timing issues are causing the current stock price dip. A reverse stock split can help them stay listed, but it doesn't fix any underlying business problems, it just buys them more time to sort things out. Without seeing their latest financial statements, it's hard to say definitively why the stock price has fallen so drastically. However, based on this filing, the immediate concern for VYNE Therapeutics is maintaining its listing on a major exchange like Nasdaq. Delisting would make it harder and more expensive to raise capital in the future, which is critical for biotech companies that often need significant funding for ongoing R&D. This report is signed by Mutya Harsh, who holds a key position at the company as Chief Legal Officer and General Counsel. This indicates the seriousness of the filing and that the company's legal and leadership teams are managing this situation. Looking at the overall picture for VYNE, the immediate challenge is clear. Avoid delisting. Their ability to do this will depend on whether they can execute a strategy that convinces investors their stock price will sustainably rise above $1. This might involve positive news from their pipeline, strategic partnerships, or efficient cost management. The risk for investors is that if they fail to comply with Nasdaq's rules, their investment could become much harder to trade and potentially lose significant value. The other risk is that even if they reverse split and stay listed, if the underlying business doesn't improve, the stock price could continue to decline. In conclusion, VYNE Therapeutics Inc. is facing a critical juncture. They've been notified by Nasdaq about their stock price not meeting the minimum requirement. They have a chance to fix this, but failure to do so will result in their stock being delisted from the Nasdaq capital market. This is a significant hurdle for any listed company, and it's a situation that investors will be watching very closely. Alright, that's our breakdown of VYNE's current situation. What's your take on companies facing delisting threats? Do you think a reverse stock split is a good move or a sign of trouble? Let us know your thoughts in the comments below. If this deep dive was helpful, please hit that like button and subscribe to Corporate Decoder for more. And once again, join our growing community on Discord. You'll find the link in the description. Thanks for watching, and we'll see you in the next one.